just a quick update on Corsair because they released their third quarter earnings and we did their second quarter last time. So some things worth mentioning. They mentioned their partnership with Ubisoft. Now I think that what's important here, and I didn't highlight it last time, is a company like Corsair has the ability to make these partnerships with other businesses, tailor-make their hardware, make it a better experience that other companies can't necessarily do. Also, they created their first ever monitor. Probably going to butcher this name, the Xeneon 32QHD 165. Really easy to remember, not a mouthful at all. But the key here is to see how does this product compare to other competitors in the market, and are they opening up a whole new kind of segment for their business? That could be actually pretty exciting. Okay, now let's look at their financials. And it's really not great. And please watch the previous video because you're going to get a better sense. I'm just going to go through quickly some things that popped out compared to the second quarter. And of course, as always, entertainment purposes. Like, comment, and subscribe. Smash the like button. So in terms of net revenue, we can see it was down to $391 million. Their gross profit, $100 million. Their sales, general, and administrative is up $12 million. And their interest expense is down. And of course, their net income is abysmal because with $100 million in gross profit and $76 million in just your sales, general, and administrative expenses, and then you factor in the product development, so it just keeps getting chipped away. So that's $90 million off of your gross profit right there. Not much to work with. But now, what I'd like to just point out here is as much as they dropped their revenue. Remember our video last time, they dropped their revenue, but their gross profit stayed the same. Here, their gross profit got even worse. So that's not a good sign in my opinion, but it might be temporary, so we should talk about that. Now, when we look at a side-by-side comparison, right, we can see that from the last quarter, right, this is really important. Just from the last quarter, it's $472 million versus now it's $391 million. Now, I can't remember which quarter is the exact best. I believe they said fourth quarter was their best quarter. But third quarter was, as far as I could tell, was supposed to be better than the first and second quarter. And so the fact that they're dropping in their revenue, that's really not great when the quarter's supposed to be doing better. Now, sales, general, and administrative, we said gone up, but in comparison, it actually went down a little bit, which is nice. And the interest expenses went up, and they're maneuvering all of their debt, so we'll really have to see what happens in the long run. And with their interest expenses on a quarterly basis, it looks to be a better situation for them. I'd have to really analyze it a little bit more. I think they're going to have a lot more capital to work with, and they just changed over their whole system. And it's a 250-page document, so I really wasn't able to go through everything with a fine-tooth comb. Now, what I thought was pretty interesting is they mentioned that in terms of their net revenue decrease, they're still blaming supply and logistic constraints and the shortage of reasonably priced GPUs. Now, keep in mind, as Bitcoin goes up, there's going to be more demand on these GPUs because people use them to mine Bitcoin and things like that. However, and this is really important, there's a big movement in the, let's say, Bitcoin space for people to get off of proof of work, which requires all these GPUs, to different systems, mostly because there's this green approach and they don't want to use so much energy. You can look into all of that on your own if you'd like, but there might be a lot more GPUs coming onto the market, especially as production increases and especially as demand decreases if all of these things happen, like Ethereum switching and less GPUs needed for mining. We'll see what actually happens. Now, in terms of their sales, general and administrative expenses, right, it grew $10 million compared to the last September quarter. However, it shrunk a little bit compared to the last quarter. So they have a $2.7 million increase in personnel-related costs. Is that because they're expanding? Is that because they're doing all of this shipping and logistics in their hubs? Possibly. There could be 100 reasons why they had personnel-related increases, but that to me is good. $2.5 million increase in marketing expenses, $2 million increase in director and officer insurance fees. Now only $2 million increase in distribution costs. I would have actually thought that was going to be a lot higher compared to last time. It was a much bigger chunk, the distribution costs, to their increase in sales and general administrative expenses. And yet their gross profit is down. And it seems like that has a major, I remember reading, they mentioned that the logistics affected their gross profit as well. So I'm a little bit confused why over here with sales, general, and administrative expenses, it looks like the shipping is being less of an issue in the increase compared to gross profit, it taking a more detrimental effect. But you never know, maybe that has to do with the logistics of their suppliers and other people are passing on those expenses. It's hard to tell exactly, but something to keep an eye on. Now, accounts receivable is down to $252 million, and we mentioned this was a big deal, and yet their inventory is increasing. So now, if we just take a look at the last quarter, we can see that the account receivable actually only went down slightly. It was a much bigger jump, we felt, when we were looking at it last time, which means there were fewer people buying. But there is a big jump in inventory. So hopefully they had mentioned that they are stocking up on inventory to help them deal with the logistic issues, meaning if they can't order things and manufacture them in Asia, get them to America in time, they're just going to have to stockpile. And so it's going to cost more in terms of storage and in terms of all of the other issues with holding inventory. So that's interesting. Hopefully they're right. Hopefully they'll be able to sell all of this stuff and turn it around in the fourth quarter, because you don't want them to just keep increasing inventory and continually not able to sell it, right? Because then it's not really an asset so much anymore, and they'll have to discount it. Now, in terms of inventory, they increased it by $102 million, whereas when you're looking at last quarter, it's only $58 million, so really ramping up that inventory. And if you look at what's going on, you can see that in terms of raw materials, that's for this quarter, is, I don't know, 51 million, 52, whatever, and work in progress is 8 million. You can look at the other inventory and from the previous quarter, and you can see that they really aren't just, finishing off product and slowing down. No, it really looks like they're gearing up. So this to me is kind of a signal. Yes, I'm a little bit nervous that accounts receivable is going down, meaning there's fewer customers buying their goods on loan. So for example, a Best Buy or a Walmart, those companies will buy and they'll have an account receivable. So that's going down a little bit, makes me a little bit nervous that there are fewer customers. However, this is signaling to me in terms of the inventory stockpile and in terms of the fact that they're ramping up production of inventory, that they really believe that this is short term and they're going to turn over all of this inventory. That's what I would see, right? If they were really concerned that they're building up this inventory, they don't have anyone to sell to, what's going on, I don't think they'd be ramping up their production of inventory. So I would see this as a key signal to better things to come, in my opinion. And that's actually pretty exciting. Now, in terms of accrued reserves for customer incentive programs, it's a big jump here. 10, 11 million that they're focusing. Pretty much this is on marketing. I don't think that's necessarily a bad thing, but it's something to keep in mind. Now, in terms of accrued freight expenses, so, this is part of that logistics issue. You're seeing another $10 million being put here into their accrued expenses and other liabilities. So it's just interesting seeing how massive of an impact it's happening to their gross profit, dropped a few percentage points, possibly because of this. All these different expenses, sales, general and administrative, it's just kind of racking up in different spots. So hopefully when all of this is solved, and it'll be solved even without Corsair. Yes, Corsair is trying to stockpile inventory to offset it, and they're trying to use their own hubs to offset all of these logistic issues. But hopefully all of these logistic issues will be solved by the greater world as a whole, and hopefully a lot of these expenses will come off of all of these earnings reports for Corsair, because it's really hurting them hard. Now, in terms of geographic information, this actually I thought was the worst news compared to everything. It actually makes me a little bit nervous. So if we just take a look at everything that's going on here, so in terms of the Americas, right, it's 189 million. That's a drop. Everything is kind of dropping. Europe and Middle East, Asia Pacific, that's not great. Now, what I would kind of highlight here is when we're looking at it compared to the past quarter, and when we're looking at it, we can see that the Americas, right, so I suppose North and South America, hardly a shift at all, right? Hardly a movement, 189 versus 191 in the previous quarter. That's great. And that is, I would say, a major part of their who they're selling to right now. But in the previous quarter, that they had a similar demographic, a similar amount of revenue from Europe and Middle East. And that just, a quarter of it got taken out. And so why is that? Is that because of logistics, right? That's a little bit hard for me to understand because a lot of the logistic issues, at least that we're seeing, are on the west coast of the United States. Now, it could be that there are genuine other logistic issues in Europe and the Middle East. That's a little bit harder for me to tell. I know that, there are just issues getting freights in general. So I don't really know. But my problem is that purely logistics, or is that somewhat to do with inflation? Is that somewhat to do with people's spending habits? And then when you look at Asia Pacific, I was really excited. If you remember in the past video, you can't tell by my voice that I'm excited. I was really excited because it was ramping up, 94 million. This is a huge increase. And maybe Asia Pacific market is now going to come up to the Americas, to Europe and Middle East. This shows huge growth potential. And yet there's a huge, I wouldn't say crash, but it just got eviscerated, right? 50% of the revenue. So when you're really thinking about what happened to this company in terms of logistics, in terms of cost, but in terms of revenue itself, the Americas were not affected. So if you're thinking to yourself, well, I'm not so affected by this pandemic, I'm still gaming, I'm still buying stuff, well, you're not the demographic I suppose we're really worried about. What we're really worried about is what's happening in Europe and Middle East and Asia Pacific. And does the Asia Pacific, this evisceration, which is a little bit scary, does this have to do with the CCP's approach to limit kids' game time? Is that what's going on? Is this have to do with other countries? Is it inflation? Is it logistic issues? I would love to know. So if you're from any of those countries and you have a feeling or just a pulse on this type of thing, please leave a comment below what you think is happening. If you're from that country, or even if you're not, if you have an opinion, you might have some insight what's going on here in terms of all of these numbers. So that to me was a little bit of a crushing blow because I was really excited by the expansion into Asia Pacific. Now it still could happen, right? This could have to just do with people saving up some money short term. I'm not saying it won't happen. I would expect that eventually it will happen, but I was hoping it would happen, I suppose, a lot sooner. Okay, nevertheless, let's keep moving. So if we just take a look at some of this stuff in terms of segment, I think it's also interesting. So you can see gamer and creator peripherals, right? That's 139 million, whereas the gaming component systems is a much bigger $250 million of the revenue. Now that area has a worse gross profit margin, I should say. So even though it's 52 million, the gamer and creator peripherals is 48 million. So there's a $100 million difference in revenue, and yet they're pretty close in gross profit. So I wanted to highlight that for you because the positive upside is when we look at last quarter, right? So I put in light gray what's this quarter and just highlighting some of last quarter. So you can see gaming components and system segments, right? $317 million versus $251 in this quarter. So that's a huge drop. Whereas in gamer and creator peripheral segment above, you can see 155 to 140, hardly a drop. So something to keep in mind that there's people buying less hardware in these other countries. And now the reason why this is important, by the way, is because the gross profit for gamer and creator peripherals we saw last time was a much higher percentage, right? You can see even down here, it's 35% versus 23%. So if gamer creator peripheral segment was hit, that would have had a much bigger impact on the company's gross profit in comparison to the revenue to gaming component and system segments, which is a less profitable segment. Although it still yields lots of money. I'm not saying it's not. It's become less profitable than the other segment because of that huge cut. Okay, but well, maybe not less profitable, but almost just as profitable, whereas previously it was 50% more profitable. Okay, so what am I kind of thinking about in this company? I think there's a lot of great stuff about Corsair. Really, what concerns me is, I suppose, just that geographic stuff that we mentioned. The logistics stuff, I think that's really short term, in my opinion, in terms of their debt. I don't think it looks too scary to me, assuming all of this stuff gets solved, within a year or two, which it seems like it should. And so I think there's a lot of positives. I would want to know a little bit more of the geographic issue and also start to look into their developments, let's say in their computer screen and other areas. Are they still kind of firing on all cylinders? Do people still like their products? Always something to keep in mind as just a client, as a user. Thanks so much for watching. Like and comment and subscribe. Please let me know what you think of Corsair, either their products or the company as a whole. I think I'm still pretty excited about it, but like I said, I would love to know a lot more about that geographic stuff. And I suppose the accounts receivable. Why does that keep ticking down, even as their inventory is building up? They kind of believe they're going to sell a lot more, which makes me excited. They're ramping up production, and yet the people buying hasn't really caught up yet. But maybe the fourth quarter is going to be a big deal. Also, let me know if you think in Asia Pacific and Europe and the Middle East, if for some reason that the third quarter is just a reason why people don't buy and that's going to bounce right back up. That's totally possible as well, I suppose. But yeah, thank you so much for watching. And those are my concerns and the positives.